2019 HMDA data is out. What does this mean for mortgage banking companies? This is the Mortgage Banking Livestream. This is the Mortgage Banking Livestream, and today is July 6th, 2020. Our purpose is to educate, to connect you, and to entertain. Today we're going to have a business update, we're going to have a regulatory update, and we're going to talk about some things that are important for mortgage banking companies. In particular, we're talking about independent mortgage companies, but also this relates to banks, and in particular, talking about fair lending once we get into the regulatory side of this. But before we do that, a couple of shouts out. One is, as I've mentioned before, the Texas MBA is having its annual symposium, the annual symposium on September 14th and 15th is going to be in Dallas Legacy West, Plano Legacy West, and you want to make sure and you sign up for that. In connection with the symposium is Reverse Mortgage Day. And that's something that anyone who's interested in the reverse mortgage industry will want to be involved in and attend. It's kind of a small cadre of people that get together and talk about reverse, but these are some particularly smart people in the reverse space. The symposium itself, as you know, always has great speakers, always has great content, and it's something you won't want to miss. Right now, there's actually a risk-free registration available because of the possibility that things could change along the way, just given our current uncertainties in the environment. But you want to make sure that you can be involved in that. Again, fantastic group, fantastic people, great content. Also, just one other shout out here. The MBA announced that Matt Rocco, chairman of the board of and CEO of Graham Bridge Real Estate Capital, is going to be, he's been nominated as the vice chairman for 2021 upcoming membership year. He's expected to be confirmed in connection with the October annual convention. And so one would expect that he would be there, be confirmed. And I anticipate that there's still some pieces putting together. People over at MBA are putting together all the different pieces of how to get that done. They've announced that all of the conferences are virtual this year. So I assume that they're working on how to get that done virtually. But a great group, as you know, the National MBA, and congratulations to Matt Rocco, a stalwart in the industry and very active. And our congrats go out to Matt in that regard. Okay, talk about mortgage. The business is still strong, and there are a lot of uncertainties. We know this. But one bright spot, there's a lot, but one bright spot is that the Congress and the Trump administration agreed on the extension of the application deadline for PPP loans. And so that deadline, which already has the original deadline has passed, but they have now extended the deadline out to August 8th. So for those mostly, the idea is that it's focused on small businesses. And I don't know about your area, but in our area, a number of these smaller businesses have gone out of business or at least shut down potentially forever. And so this additional stimulus, that an extension of the stimulus should be helpful for a lot of people. There's still a lot of money out there. As you know, we've had several people on this show that have talked about the PPP loan process, how to apply for that, how to make sure that you maximize the loan forgiveness. And so that deadline has been extended. So if you know of somebody who has a small business and has not yet applied, and they're having some difficult times, then they should check into the PPP loan because, again, the deadline for applying has now been extended to August 8th. And there's still money available. Good news out of NAR. NAR says that pending home sales made a record comeback in May, up 44.3%, the largest percentage increase in a single month since they began tracking data. And this is great news for the pending home sales, good news for the mortgage industry in connection with financing those pending home sales. That should be very positive. I also note that on a similar note, the MBA reports that the numbers of loans that are in forbearance are actually down slightly again this week, down to 8.47%, just down a little bit. There's still 4.2 million people or so in forbearance, but that is still trending in the right direction, even if small. Any decrease in that regard is a good sign. Mortgage apps are slightly down, not much, but slightly down, 1.8% from the week prior, and that is that's just sort of the cyclical fluctuations one would expect in any sort of a regular market. So, in fact, I see this as good news. Some might say it's trending the wrong direction, but the truth is, if you have a steady fluctuation from week to week, it's probably healthy. And so I'm actually I'm glad to see that we're seeing a more normal sort of market instead of going vastly in one direction or another. It's probably better for the long-term health of the industry. As I noted last week and the week prior, hiring in mortgage is still strong. And so there are people out there that are looking for positions and finding them pretty quickly. There are employers out there that are looking for people. There's some good people that are making changes. And as I've said before, I get lots of requests and lots of information about people looking to move. So if you're an employer looking for an employee, or vice versa, you're in the mortgage business and you're looking for a good home, let me know. I'm not a headhunter. I don't get paid for this, but I do connect people as part of the mission here. And so let me know, and I can connect you with people that have inquired, and we can connect you, and you guys just do whatever you do. Part of what I love about this industry is it helps people build wealth. It helps people get into homes, and that's good for families. And so anything we can do in that regard, we take great pride in that. Optimism for 2020 still there. As I said, hiring market's good. The numbers of pending home sales is good. There's a lot of good news. We still, though, have the COVID-19 issue that's lurking and overhanging in every step that we take. As you know, lots of different states have said that the numbers in their particular states have increased over this past few days and July 4th weekend, and so it's still some signs for concern. We got to make sure that we keep on top of that, and make sure that we try to maximize the ability to stay safe. Staying safe is really not that hard. I see lots of people not doing it, though. Every time I go out into public, I see people who are just not taking the precautions that they need. People stay healthy, stay safe, prevent this from happening. We can do it. It's basic physics. And, if you distance, there's a strong likelihood that you'll be just fine. If you wash your hands, strong likelihood you'd be just fine. But I see so many people just taking unnecessary risk. I'm in the business of risk management in my law firm, and there's some risks worth taking, some risks not worth taking, and there's some risks that, why would you take it? Something to think about. There are a bit of, as we get closer to the elections, we get closer to November, we hear more and more in terms of pundits that are talking about what the election is going to look like this year. Of course, nobody knows. I'm a DC guy, and I'll tell you, nobody knows until the day you wake up the morning after the election who is going to win most of the time. Anything can happen. And I'll tell you, currently there are a lot of people talking about 6 states, that the presidential election is boiling down to 6 states as the likely states that could decide the election. These are Michigan, Pennsylvania. It's the ones you would expect, right? Michigan, Pennsylvania, Wisconsin, Arizona, Florida, and North Carolina. These are swing states that could go either way. and there's a lot of space between now and November, but this is what we are hearing. And so it makes it fascinating to people who like to watch the elections as they roll in. But if you care about this economy, if you care about housing, if you care about the mortgage banking business, get involved, get active, get with your MBA, whether it's the state level, the national level, or both, and make sure you stay atop of this and make sure that you get your voices heard, and make sure that you vote come November, as you will need to. Whichever direction you go, just make sure your voice is heard. That's part of living in this great country. Let's switch to regulatory and legal for a second. Couple things here. The FFIEC has announced that the HMDA data is publicly available now. The 2019 HMDA data is publicly out. Now, what does this mean? Well, for over 5,500 institutions, the HMDA data is now out for digestion by the various groups, and anyone who is interested can gather that data, look at that data. And I'll tell you that in this current administration and in past administrations as well, the fair lending issues, and in particular, I think in the circumstances we find ourselves in currently, there's probably even more heightened sense of urgency and attention to this. Fair lending issues are prominent in the mindsets of people like the FDIC, at the CFPB, at the OCC, at the Fed. The regulators are very attentive to these types of fair lending issues. I know from work that I do in my law firm, people that I encounter and interact with in this industry, that there are a number of fair lending matters that are floating around out there. And these are not just banks. Typically, in the past, these were always, not always, but they were oftentimes related to banking depository institutions that people were interested in fair lending issues, in particular redlining and so on. But I will tell you that we know that independent mortgage companies are also receiving a fair amount of scrutiny in connection with fair lending. You will want to make sure, especially now that the data is out, that you are taking care to have your policies in place, be reviewing your data, be taking an approach that you think makes sense, build the infrastructure that gives you confidence in your fair lending numbers, because if you don't, you will be taken to task. And even if it turns out that at the end of the day you don't have fair lending issues, it is a painful and expensive process to go through a fair lending review and be talking to regulators about those issues, and there's always risk in that regard. So you want to be making sure that you and your people are attentive and attuned to those issues. The HMDA data announcements, of course, are available on the FFIEC website. I can send it to you if you want to. Just reach out to me. My contact information, as you know, is, if you're watching this on YouTube, is down below. You can also just email me or text me or comment on YouTube. You can also contact me through LinkedIn or Facebook or one of the other social media platforms we roll this out on. My phone number, if you want to text me, is 301-461-8952. Or you could just, it's troy@garrishorn.com, right? So you can just email me and I'll send it over to you. A positive announcement, we talk about regulators as somebody you want to be attuned to for talking to them in terms of examination and enforcement most of the time. But the CFPB and the OCC are going to host a joint innovation office hours this coming July 29th and 30th. And so this is an interesting development, because this is a situation where the regulators are encouraging people to come forward. Mostly this is focused on fintech, right? Encouraging people to come forward with ideas for creative innovative solutions that can benefit both the industry and also consumers. And so the deadline for requesting a meeting is July 17th. But if you do that, you have the possibility of having a virtual meeting. COVID-19 requires it to be virtual, but you have a possibility of a virtual meeting with the regulators, representatives from the CFPB and or the OCC. Great opportunity and a great time to get out and talk to your regulators and get your products and your ideas in front of regulators in a way that could benefit both you and your company and also consumers. Fantastic idea and great opportunity there. So make sure you take advantage of it. Again, I can send you this information. If you just contact me, I'll shoot it over to you, and make sure you get involved. Lastly, the CFPB issued an interim final rule and is now requesting comments for COVID-related loss mitigation options. So this is in the mortgage servicing arena, right? Comments are due August 14th. And if you are in the servicing space, or you do interim servicing, or you just have an interest in that area, comments are due August 14th. People should be commenting. People should be getting their voices heard, because nobody understands this business the way you do. And if you don't tell anybody, who's going to know? If you think we're doing a good job, subscribe to this channel. I will see you next time. I'm Troy Garris at Garris Horn. This is the Mortgage Banking Livestream.